Okay, on the screen right now you see a daily chart of the FXCM dollar index, which is basically the US dollar weighted against a number of currencies out there in the market, major currencies. What we're seeing now is, you can see from August of 2014, actually, let's see if it goes back even further. Right around, let's say July of 2014, a very sharp uptrend began, right? And price stayed above the 50. It crossed above the 50 moving average on July 29, 2014, right here, and it stayed above there all the way until, dipped below right here. We don't even go touch below it until April 17. So in that time, a very strong and pronounced uptrend here. But since then, what is this? Right around March of 2015, price is sort of flatlined a bit. We're now in a range, and you see that the volatility in the range is contracting, as you can see by these trend lines here. Price actually a bit choppy, going above and below the 50 simple moving average. So what's this suggest? Potentially a distribution pattern here, where we have a long uptrend, and now that move is being consolidated. So maybe it's going to result in a breakout. This is also known as a pennant pattern here, I believe, where you have, this is the pole of the pennant, the sort of the flagpole, and then you have a triangle type of pattern coming out of it that results ultimately a breakout to the upside or to the downside. So in this type of scenario, you could trade volatility. You could sort of speculate not so much on direction, but that the volatility will increase. Personally, though, I think a downside move, if I were to pick a direction, I would probably lean towards a bearish move. We do see a pattern of lower highs in place, especially with this move here, on September 4th. We see a relative high here. We weren't able to break above this trend line here, and it's now lower than this one here. So we do have a pattern of higher lows as well, so that's the flip argument. But to me, this seems like maybe a classic distribution pattern where price is going up. Now sellers are slowly getting out of their position. If we look at, this is the US dollar and FXCM dollar index, which weights currencies differently than the futures dollars index. The futures dollar index here is very, oh, that's not it. This one is very much weighted towards the euro. So the US dollar index is a little more evenly balanced, doesn't disproportionately reflect the euro. This one, the futures dollar index, does have a much greater weighting on the euro-US dollar exchange rate. And there we see the dollar has more clearly entered a downtrend here. We definitely have a more clear pattern of lower highs in place. We don't have really a pattern of higher lows in place. We have more like a descending triangle here. So to me, if we're looking at the US dollar index chart, and it's like, all right, maybe this is going to be you see signs of a breakout up, you see signs of a breakout down. That could lead to some uncertainty. I think the case becomes stronger when we look at the dollar index for a move to the downside here. And some interesting trading opportunities here. We could try waiting for a test of this trend line here. That could be an interesting shorting opportunity, and then placing our stop above the nearest high. So perhaps here we could look to enter, even now, 96.50. Right now we're at 95.24. If we can get a rally at 96.50, somewhere around there, even 96, that could be interesting. Put our stop at 98, and then we could target a pretty far move down. It's conceivable that we go down to 86, 87. There's a level here, right there. That could be an interesting level to target as well. Of course, we'll probably run into some resistance at 93.42, because this is a fairly well-established support level. So what could happen, conceivably, is that price doesn't really pull back to 96.50 or anywhere yet, but hits 93.42, runs in that support level. We see some bears taking profits. We see the market shoot back up, and then that would be the high to where it shoots from. Could be an interesting short opportunity. If it goes back to 96, you short at 96, you have your stop at 98, risking 2 points, and then you can target, maybe all the way down here, 86, which would be a 5-to-1 reward risk. So that's sort of a trade setup that I've been thinking about. I'm focusing on other things at the moment related to more about U.S. stocks. Of course, still have the position on in dollar yen that I'll keep you updated about my position there, but that's sort of a longer term outlook. Let's take a quick look at dollar yen, in fact. And this one is still here. This one is actually one, because the yen is a unique situation, I'm actually interested in going long the US dollar against the yen. And we'll see if it falls back to 117. I probably would accumulate there. But I do think this could be an interesting turning point in the US dollar. And again, with all of these setups, you know, it's more so what makes it really interesting to me is the reward risk opportunity, right? So it's not so much that it's definitely going to go down, but more so that you can risk a little bit and potentially get a larger reward that makes this something that's interesting and perhaps worth considering. Any questions you have, anything you want to add, join us at informedtrades.com. Best of luck in your trading and investing, and we'll see you next time.